French April CPI number has just dropped, rising 2.4% year on year. That's a little higher than the estimate of 2.2%. But your broad approach to this inflation, this raft of inflation data we're going to get out today, you don't think it's going to move the dial too much for markets?
Morning, Anna. I don't think it is going to move the dial too much. Why do I say that? Because if you look at the inflation prints that regional inflation prints that we've been getting since yesterday, it points to somewhat short of a higher number from the Eurozone inflation data today. But the markets are already well priced for a June liftoff from June rate cuts from the ECB. It is what happens to the ECB's rate trajectory beyond June that is in contention. The markets at the moment are thinking there will be 3 rate cuts from the ECB this year. That seems entirely reasonable. But the key question is, what is the ECB going to do if the Fed is not able to cut rates as much as the markets think they will be able to?
Yes, and that takes me to the next question. As we wait for the Fed to start their meetings, of course, we have to wait until later tomorrow to get the results of their deliberations. But the dollar has been strengthening on bets that the Fed may boost its hawkish rhetoric. What's your expectation, Ven?
I think that the Fed has kind of painted themselves into a corner by indicating 3 rate cuts for this year. I don't think that is going to be possible if inflation continues to play out the way it has been. In fact, if you look at the inflation premium in the markets, that is about 52 basis points. That's the highest, and you don't get a number like above 50 basis points very often. That suggests that inflation is going to be sticky, and it's going to be very hard for the Fed to shoehorn 3 rate cuts this year. So I think they are going to be acknowledging that prospect that they won't be able to cut rates as much as they thought they would be able to cut. So I expect the Fed to retain the language saying that it would be inappropriate to cut rates if inflation doesn't converge to 2%. So very much a hawkish take from the Fed is what I'm expecting.